Good afternoon. I am a Canadian student graduating in the class of 2017. Today, I'll be very pleased to be presenting to you my insights on the implications of lower oil prices on the Asian market. I will begin by touching on a macro focus, moving on to analysis of countries and industries, specific companies in this environment, and then finally a brief outlook on oil moving forward. The pricing of oil is primarily affected by supply and demand fluctuations. Since the 1980s, we can see the main triggers of price changes had to do with either growth in supply or demand. Recent trends have pushed many oil-producing countries into a deficit for the government budgets. Specifically, the scale here illustrates the OPEC members most affected by the drop in pricing. In Asia, countries such as Indonesia and India have been using this time as an opportunity to reduce its reliance on government subsidies. Subsidies were previously in place to make it affordable for its citizens to access oil. With a decrease in subsidies for oil, there will be an alleviation in national deficits. This can be seen through Malaysia's sensitivity to crude oil price movement relative to the global scale. Governments in countries such as Indonesia, who are reducing subsidies, will begin by directing its money towards building infrastructure and social programs. However, a reduced subsidy will make it difficult for specifically the lower class due to the cost of staple goods. In the past years, based off data from BP's Statistical Review, we can see that U.S. oil production has been rapidly outpacing oil consumption. However, if we were to take a step back and take a look at world production over consumption, it appears as if the world has been producing less than it has been consuming every year, which seems counterintuitive. In fact, what has been happening is that there has been an increasing trend in countries using strategic petroleum reserves, or SPR. This has been done to reduce its reliance on other countries for oil. Recently, China has revealed its outlook to increase SPR dramatically. Due to increasing inventory levels from SPR, demand is in fact larger than supply. So which countries are affected the most within Asia? A couple countries that show up predominantly in the news are China, Japan, Russia, India, Indonesia, and Malaysia, which account for more than 70% of the Asian market in terms of GDP. These will be the key countries that we will be exploring. From a global perspective, the countries which typically lose out the most from low oil prices are the largest oil producers. On the other hand, the largest users of oil benefit from low oil prices. However, sometimes countries both produce and consume oil significantly. What happens to these countries? Are they better or worse off? As a better indicator to determine which countries are impacted the most, we will look at the percentage of exports to GDP and the ratio in which countries consume oil in comparison to production. Listed are the major countries in Asia which have large percentage of exports in comparison to GDP. Highlighted are the 6 countries mentioned earlier. With lower oil prices, many countries' economies have slowed down. Thus, countries dependent on exports, such as India, will be negatively impacted despite the fact that they have consumed more oil than they produce. Out of the 6, Malaysia will be in the worst predicament, while Japan will have the least pressure. To create a gauge for a comparison on a given country's consumption to production, I created the consumption to production ratio. A higher ratio indicates a country that imports significantly more oil than it produces, such as Japan. Countries which have a lower ratio typically are net exporters of oil, such as Russia. Based on these 2 indicators, I created a decision matrix to determine which countries will be gaining and losing. In summary, Japan will be better off, while Russia will be worse off according to my scale. Next, we analyzed the industries most affected. I decided to investigate the transportation and energy sectors further. I felt transportation, such as airlines in specific, would be the largest benefitor. In the airline industry, 33% of their average operating expenses consist of oil. Within each country and industry that benefited the most, I selected an equity that would be positioned well to gain from the low environment. I decided to choose Japan Airlines due to its positioning within the industry. With the drop in crude oil pricing, we can see the immediate gain in value for the stock. Year to date, it has returned approximately 49%. I did a short valuation on Japan Airlines and found it was trading at a relative discount to many of its close peers and DCF. Moving on, I look at a company within Russia in the energy sector. With expenses in foreign currency and revenues in domestic currency, the dramatic drop in the ruble will take a hammering on the company. Year to date, it has dropped 37% along with crude oil pricing. In terms of valuation, it has been trading at a large relative discount. However, contrary to Japan Airlines, this wouldn't be considered a value play due to all the negative qualitative factors. Finally, we come to the projected time horizon for oil pricing. It's actually very difficult to predict oil pricing with oil investors often not being rational. For instance, inventory and production have been increasing for the last 4 years. However, the market only decided to take notice recently and correct itself within a 4-month period. This correction could have happened a year earlier or a year later, but it was impossible to predict. Thus, moving forward, making an accurate assumption on oil pricing is very difficult. However, that being said, with lower oil pricing, it is expected for smaller companies such as Bashneft to exit the industry due to higher break-even costs, which will reduce the worldwide supply. One such quantitative estimate is made by oilprice.net that says crude oil prices may rise to $62 within a year. On that note, I'd like to thank you for listening to my presentation. In summary, from the lower pricing environment, I determined that Japan Airlines and Japan Airlines would benefit the most, while Russia, Energy, and Bashneft will lose out the most.